Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about a company that could be included in the group of FAANG stocks. Yes, Facebook, Amazon, Apple, Netflix, Google. This company can be that big. Big data analytics is big business for this company. And as data volumes grow and more analytical capabilities are required to make sense of this data, the company is going to match that growth. The company has a wide moat Gotham business, which covers its government contracts, and its Foundry business, which is for the private sector, has massive growth potential. This company is set to grow revenues exceedingly fast over the next 5 years, and the stock is set to break out. And despite posting hefty adjusted gross margins, the company continues to forego GAAP profitability today in order to invest aggressively for the long term. And for this reason, the stock has been in a holding pattern for the last several weeks, just waiting for the right time to take off. Now, can you tell me what company I'm talking about? Okay, I know the title of this video did give it away and told you what company I'm talking about. And I'm sure that's why you clicked on this video. The company, of course, is Palantir, ticker symbol PLTR. And Palantir is one of my highest conviction tech investments. If you bought while Palantir was hitting all-time highs back in January, I'm sure seeing this red today has you and many investors in the same situation thinking, oh my goodness, when is this stock going to do a reversal? Well, no worries, my friends. The fundamentals of this company have only gotten better since then. Palantir is a high conviction long-term hold for my portfolio. And when the stock started to sink below $20 throughout the month of May, I bought more. Plus, I'm not the only one shopping Palantir. See, bulls think the weakness we've had over the last few weeks is an excellent buying opportunity. But the bears believe the stock will sink further. Now, it seems as though through the debates between the bulls and the bears, institutional investors have already picked sides. In the latest 13F filing data, it shows that institutional investors combined bought around 1.2% of Palantir's public float in the first quarter. As a matter of fact, 504 institutional investors bought Palantir shares. This goes to show that the so-called smart money is very bullish on Palantir and its outlook on growth. The trading data in the 13F for Palantir's 60 biggest institutional investors showed that during the same time period, 48 institutions bought more shares of Palantir. This again points to bullish market sentiment around Palantir. All of this together should come across as encouraging for long-term retail investors. Let's keep digging on Palantir. Palantir has consistently improved its abilities to sign new deals. Palantir's revenue from government clients has more than doubled over the last 7 quarters, which suggests that the company isn't relying on pure luck for its growth, but rather it has good connections with various government agencies and that it has the technical expertise, security protocols, and the know-how to get qualified for those government contracts. If you look at the federal procurement data system, it shows you which companies are doing business with the United States government. It shows you when new contracts have been added too. And so far, in Q2 of 2021, Palantir has signed 9 deals with different government agencies. At this point, I believe Palantir just needs to rinse and repeat for its strategy for government contracts. It's been working so far, and it will help push along Palantir's growth story. Here's something else. Palantir has managed to increase its average revenue for its top 20 customers by about 34%. The company has also managed to increase its revenue per customer by 29%, which is a significant growth amount. This double-digit growth strength, with the fact that the company's software costs don't increase dramatically with each new customer, means the more Palantir's revenues can grow, the more the company's margins will also grow. That'll increase its potential to drive strong shareholder returns. This double-digit growth for Palantir's current customers can continue to increase. Think about this. The United States has suffered 2 major attacks on core infrastructure in the past 6 months. The Colonial Pipeline experienced a ransomware attack that followed a SolarWinds hack roughly 6 months prior. President Biden has signed an executive order to strengthen the United States cybersecurity and deemed this a top priority. Now, keep this in mind. Back in April this year, Palantir was selected by the National Nuclear Security Administration to provide its Office of Safety, Infrastructure, and Operations with a platform for effective knowledge management and data-driven decision-making. Considering that Palantir helps secure and maintains the United States nuclear stockpile, I think it's safe to say their software is at the top of the list for every government agency. I believe that President Biden's executive order will benefit Palantir significantly over the next several quarters, and Palantir will experience tailwinds they did not account for. Palantir is a great company and is very likely to remain a mission-critical component of the U.S. government tactical infrastructure for the foreseeable future. That alone gives the business significant stability concerning its future and will likely lead to strong growth over time. I'd like to touch on the stock compensation aspect of Palantir's business just real quick because it's been brought up in the news lately. I've started a few companies of my own in the past, and when you first start out, your resources are limited. You typically can't pay your employees market value, so what you do is pay them with stock compensation. And at the beginning, the stock is nearly worthless because you still have to build out the company. But once that company has grown, then that stock starts to gain value. Once the company reaches a certain target, it could be a time target or a revenue or profit target or going public. And it will say in your stock compensation contract when you can turn your stock over for the value it holds. Now, in Palantir's case, I believe they went a little overboard in offering stock compensation. And over the next 2 to 3 years, they will be paying a higher price because of the decisions made earlier on in the company's beginnings. And really, that's it. Their margins will be a little bit smaller because they're paying a little bit too much in stock compensations. So it's over the next 1 to maybe 3 years at the most, and then that number that you see in their earnings report for stock compensation will start to decrease over time. Have you started a position with Palantir? What are your pros or cons regarding Palantir? And as always, if you have watched till the end, you, my friend, are totally awesome. If you could, smash the like button, share this video, and click subscribe to join our family of investors. Thank you so very much for watching, and I will see you in the next video. You can help out the channel and earn free money while doing it. First, earn $10 worth of Bitcoin by signing up for a BlockFi interest account and depositing $100. Plus, the added benefit to using BlockFi is that you will earn interest of up to 8.6% annually on your cryptocurrency. Second, earn 2 free stocks worth up to $1,850 by signing up to Webull and depositing $100. Click the links below to get started.